Ross, over the past 20 years, you've been at the forefront of media innovation and transformation. Are there specific sectors that will bring opportunity, or will this new decade require an across the board shift in strategy?
It's really an interesting time. I truly believe the fate of big media is in its own hands today, but the end is near in many respects. So to quickly answer your question, I do think an across-the-board shift is critical. That said, even though technology is advancing really faster than ever before, if we really look at the arc of technology, I think the next 5 years will make the last 15 years look like it moved at a snail's pace. I think we're seeing innovation really hourly, where it used to be every 6 months you'd see something change, but now we're seeing things change so dramatically. All that said, building brands like the big studios and big media companies have is really hard to do. It's even harder in a more fragmented world. So I do think the fate lies in the hands of News Corp and Condé Nast and Disney and Comcast and NBC, et cetera, if they move aggressively. And I think we've seen periods where companies have moved, and I've been lucky to be a part of some of that. And I think we're in a little bit of a lull as it relates to big media right now. So what you're seeing, I think, in many cases is the Googles and the Apples and the Facebooks of the world really start to accelerate even faster, which has to be a scary thought for traditional media companies. All that said, I think it's happening faster, and big media is more aware than it's ever been of this. The question is, can they move? Right? Distribution is more ubiquitous than ever. Content creation is more ubiquitous than ever. Emerging territories are growing faster, clearly faster than the United States. If we look at China, we look at India, we look at Brazil, probably as the three most dynamic markets right now for the next 10 years. All that said, I think the experience that exists within big media and the advancements in technology that are happening in new media, I hate to call it new media anymore, but new media, I think will be really transformational over the next 5 years. This is the critical moment, I think, of the last 100 years of media.
There have been a number of trends and technologies that people believe are going to have a big impact on 2010 and the years that follow. We'd like to ask your opinion on some of these reports. Beginning with 3D television, is it going to be a game changer?
Not today. I'll separate into two different areas. I think 3D as it relates to theatrical is going to be game changing. I think what Cameron did with Avatar is just the beginning. There's a really interesting movement afoot through technology companies. One's called Prime Focus as an example, that's able to take 2D film and make it 3D at very affordable costs. So as you and I sit here, think about Titanic or Indiana Jones or Star Wars being re-released in 3D. That opens up an entirely new market, I believe. You also are able to shoot movies in 2D today, original new production, and then convert it at a much lower rate or much lower cost than it would cost to actually film it in 3D. There's some trade-offs, but I think 3D theatrical is gigantic. I think it could be, in a way, a bit of a savior for the home entertainment business, which the DVD business is starting to shrink. On the television side, I'd say I'm a little more cautious. We have to look at hardware being rolled out, and we're starting to see some manufacturers talk about releasing and producing 3D televisions starting this summer. I'm not as convinced that sitting in my living room with 3D glasses is the same as sitting in a movie theater, which is in itself a bit of a fantasy. You like to go and escape the real world, but when you're in your living room sitting there and putting on some glasses, I don't think takes effect today. That said, I think it's probably 5 to 7 years before we see real impact of 3D TV in the living room. That said, having ESPN and Discovery as two examples in big, powerful networks moving forward and saying we're going to do this, I think is a great sign. Having seen a few sports and games in 3D, it is astounding, really astounding. And frankly, I think you could have a market where you see the Super Bowl or the World Series or Wimbledon or the NHL Finals being broadcast in 3D inside of theaters. if we go back 25 years and think about, there wasn't pay-per-view back then, it was closed circuit, and you used to go to Madison Square Garden to watch a big heavyweight fight between Muhammad Ali and somebody. I think you might see that in theater to take big events, whether they be concerts or sporting events, and broadcast them or transmit them in 3D into theaters might open up another new avenue.
Fox's Chase Carey decided to go to the mat with Time Warner Cable over retrans issues. What impact will this have on broadcast networks and their agreements with the various cable operators? And will it have a trickle-down effect on the whole network local affiliate relationship?
Right. Well, I think retrans is obviously the most important issue in 2010 for broadcasters. I'm not privy to all the details of the Fox deal. I think it's an important movement. I think CBS also had a similar type of deal last year with many of the cable operators. I think the impact will really be on, call it second or third tier cable channels. I think you'll see the impact of the MSOs paying a broadcast network mean less cable channels, less new cable channels, and probably a pairing of some of the lower tier cable channels. That said, is it good for them to be paying Fox or CBS fees for programming that clearly tens of millions of people watch? Yeah, I think so. As a consumer, I really don't want to see my favorite shows go away in favor of a niche cable network. That's me personally. And I think it's all just a trade-off. So for the MSOs, it probably means less new cable channels launching. For the existing lower tier cable channels, probably some of them go away. For broadcasters, network broadcasters, I think it means more money in the coffers. This is call it the next rabbit out of the hat that the studios or major networks are able to find. Everything's a trade-off. I'm not bothered by it at all. Personally, I like to see good programming, and I think the networks still do good programming better than just about anybody. Probably a positive for affiliates because that money will trickle down, whereas they weren't seeing money from all the cable networks that were launched. They will see money from networks. So maybe this is a boost for some of the local broadcasters. Should be. In terms of cable growth, since they probably won't be launching more cable networks, my guess is there'll be an uptick in M&A. So they'll look for existing standalone cable networks that are out there to acquire, or groups of cable networks to acquire. I think we just saw Comcast, assuming that goes through, with NBC, acquire a whole bunch of cable networks. 2010 through 2011 may be a very good year for M&A in the cable network world.
Cable's renaissance has delivered more networks with more hit shows than ever before for the medium. But how do cable networks continue to grow their audiences and produce that stellar original programming if everyone's talking about production budget cuts?
Right. Well, I think that's a question not just for cable, but for broadcast. The thing that's interesting to me is when you look at audience shifts and you look at television ratings, both cable and broadcast over the last decade, you've seen a decline essentially across the board. Even though you've seen the emergence of TNT or HBO, the most popular show on HBO is still very lowly rated in terms of gross audience, high quality, great demo, but not 30 million viewers for a series on Showtime or HBO. So I think you have declining audiences across the board. The value of those audiences continue to grow in terms of the advertisers. So you've seen a continued decade decline in ratings. You've seen a continued decade increase in CPMs. So that, to me, doesn't match, yet it still goes that way. And you've seen increased costs to make those shows. I think the real question to ask here is when will the ad agencies and the brands finally say enough and say if we look at data today in 2010, internet users 18 plus, if we just break down the user patterns, consumers 18 plus, roughly 30% of consumers' free time is spent on the internet, about 43% of their free time is spent on television. Now we look at the ad budgets. Roughly 9% of all advertising goes to the internet against 30% usage, and about 41% of ad budgets go to television. That doesn't make sense. So there's a big gap on the internet. So the question I have is, when will advertisers start shifting more of those budgets to the internet or other platforms? When that happens, the pressure on the producers of television programming gets harder and harder. So, and there's a trickle down for that. So if you can't pay Kiefer Sutherland $1 million an episode for 24, you can only pay him $200,000. It means the cost of production goes down. It means the agents make less money, right? The whole economy of Hollywood shrinks, which go back to the beginning of our discussion. You think about shifts in technology and growth. I still believe firmly that big media needs to be investing in new platforms, right? And there's sort of been a lag here. So I do think over the next 3 to 5 years in Hollywood and New York, because you have to attach both of them, you will have a seismic economic shift of dollars, and thus probably a seismic shift of attention in terms of where they put money. If I could go back and try to directly answer your question, I think overall budgets for producing television programming will go down. The ability to monetize those programs across platforms goes up if the attention is put there. If not, we could have, a real problem in Hollywood over the next 2 to 3 years.
As production costs continue to escalate, we've seen a decline in the traditional 100 episodes to syndication model. Will networks reduce their total number of hours of scripted programming, or do you think they'll look to produce limited order series?
Right. Probably all of the above. I think we're seeing it already, right? We've seen a reduction in scripted programming. Reality has become as much a staple of any network, cable, or broadcast today. So we've seen scripted dramas and scripted comedies shrink. In terms of the order size, what does it take to get to syndication? The question is, what's the syndication market? It's been pretty dry for the last 5 or 7 years. If we look out 5 years, will there even be a syndication market, or will we look at platforms like Hulu or Time Warner or Comcast Fancast as a platform to syndicate to? So if that's the case, then 100 episodes is somewhat meaningless. And I think we're seeing some of that in the world today. I watch a show called Rules of Engagement on CBS, which I follow sports a lot. I'm a big sports fan. I'd say Rules of Engagement has been a little bit of a utility player on a baseball team. They've put it here, they've put it there, they've put it there. It skips a year, it comes back. But I think it's at 40 or 50 episodes right now. And you're really looking at 1 or 2 more years of pickups, 13, 22 episodes, of being right there on the cusp of syndication. So then they'll syndicate it, and they'll be at 75 or 80 shows, and they'll start selling it, and they'll finish it just to finish it. And it hasn't fit the perfect model as we have known syndication, right? So if I said to you that in 3 years, YouTube becomes a syndication platform or Hulu becomes a syndication platform just as much as affiliates around the country, the economic structure may be a little different, but the lifespan of good programming will still be there.
All the major media companies are pushing to get paid for their content. Do you think there's a subscription model that consumers would support, especially if they're paying for cable and satellite programming already?
I think so for video. I'm not as convinced for print, so we'll just focus on video. The genie isn't really out of the bottle yet for video. Apple has done a nice job with iTunes in charging for video-related content, and for music, obviously. Hulu, as an outlier, has been free, and I think the challenge for Hulu will be, how does it face up against Time Warner's efforts and Comcast's efforts, and how those relate to these retrans deals that are going on? Because if Comcast is going to pay Fox or Time Warner is going to pay Fox for its broadcast programming, I'm pretty certain it doesn't want that programming on Hulu. It wants it on Time Warner's TV Everywhere platform. So I think Hulu may face its own challenge, although I could probably see a day where there's Time Warner's efforts, there's Cablevision's efforts, there's Comcast's efforts. And as a consumer, if I'm a consumer who pays Comcast for cable, I get that as part of my program. I then won't need Hulu. But Hulu will serve all the other cable distributors or consumers who either don't have cable or satellite, or just like the experience better. So I think the next year or two, frankly, for Hulu are critical as it relates to its exclusivity with programming. When that exclusivity goes away, I think the value of Hulu becomes a little more challenging for them. Fantastic product, has set the industry right. Hopefully, and probably certainly will be copied by others, and we'll probably look back on it as, you know, a great first step for traditional media. That said, again, I think it's up to Comcast and Time Warner over the next few years to define what that experience is going to be, both on the computer, on television, on the connected television, on the iPhone or mobile device. And as I said earlier, that's why I think it's so important right now. It is the most critical time. We've talked about this before, in 99, 98, 99, when the internet emerged, but you really couldn't do as much as you can do today. We saw another sort of spurt in 2003, 4, 5, and 6, and then we've had a little bit of a lull, I feel like. But technology continues to advance, and I think consumers, generations now, we're in probably our third generation of digital users, the generations are accepting of technology a lot more. So, you know, it's all sort of meeting. You know, we're probably about to, you know, hit that crucial moment.
Many media analysts believe that social networks will become a new platform and gateway for the future. Do you share that opinion?
Not really. And I'm obviously into social networks and versed on social networks. I think Facebook is at its sort of core is a communications platform, which is great. And I do find links to things through my social site, but that I don't go to Facebook to search. I go to Google or Bing to search. So I don't think they're going to impact Google and search engines that dramatically. You know, I may be wrong on this, but I really don't think so. I think we do certain things in certain places, and the availability of high bandwidth to my computer allows me to search lots of sites faster. So I do certain things over here, and I do certain things over here, and I do certain things over here. And so the idea of a central portal, as an example, probably isn't where we are today. It was 10 years ago, it's not today. So I think of searching and discovery on Google or somebody who comes along as a place to go for that. I don't think of Facebook as a place, or MySpace as a place I go to search for everything. In MySpace's case, I think they've done a great job with music. In Facebook's case, I think they've done a great job of giving me ways to connect to my friends of today and my friends of yesterday, and maybe discover some friends for tomorrow. But I don't think it's where I would go to look for a television show. That said, I think the power of individual or social recommendation is really powerful. So I watched Friday Night Lights for the first time last week, and I'm telling you about it on my Facebook page, or on my blog, or I tweeted about it, or I texted it to you, right? So I think this is all additive in terms of discovery, but in terms of central core, I still think search engines, and they will evolve, will be a great place to start that discovery for certain topics, right? For entertainment, if we talk about entertainment as a whole, there really isn't a place today where you say, this is the definitive place I go to discover entertainment. There really isn't. And so, you know, as we sit here today, there's probably 10 people working on something just like that.
A survey of mobile consulting and research firms reports that nearly half of the mobile industry executives expect mobile ad spending to double this year, and almost a third expect it to grow by some 200%. Do you think the mobile ad spend will double in 2010?
I think it'll be close. I think mobile is probably the most important distribution platform that's in front of us for the next 5 years or so, maybe even longer. We talked about distribution earlier. Ubiquitous distribution on a handheld device means you can see and watch and take things anywhere, no matter where you are, as long as there's an available network with a high enough bandwidth to access it. So if I'm an advertiser, that would be a good place for me to place advertising. A, because it's sitting there in the hands. B, because it's targeted. You know who's holding that device because they've registered for it. Hopefully they've filled out some primary information about themselves. And they're always located. There's a GPS in every device. So you know if that person is in Los Angeles or Atlanta or Russia. Doesn't matter. So the real question becomes, how do you display that message, right? It can't, a little banner on an iPhone is kind of tough to see, but a 15-second pre-roll spot on a 20-inch iSlate is pretty rich, especially if you know it's in my hands and who I am and what I like. And that was sort of the genius of social networks, and my experience with MySpace has been we knew who you were, right? And so we could, in theory, serve you better targeted ads, which should bring a higher CPM. So all that said, mobile devices of all sorts, I think, will play an increasingly important role in the future of the media business for the next 5 to 10 years. Dramatic, I think, really dramatic. Do I think we're going to walk down to Starbucks or Coffee Bean and see half the place sitting there with an iSlate in the next 12 months? Probably not. But they all have an iPhone, and most of them are sitting there with a netbook or a laptop or a Mac. So we've become that, digital age that we finally recognize that we're a mobile society.